Perfect. Good morning, everyone. Good afternoon. Good evening. Hope everyone is doing all right. So, do we have something interesting in the market today? That could be interesting. Let's see. All right, let's start off. I'm going to quickly go over the list as well before we dive into the questions right there. Let's start off with the dollar right here. Dollar it's quite nice, as in it's showing the right signs that we want to see right here. 4 hour it's going higher, which is quite nice to see. Can we reach this high and can we run that high? Would be ideal. Now, the thing is though, right here on the dollar, we do not necessarily have a clear discount rate. And what I mean by that is if we now create this 4 hour value gap, then yes, we have a 4 hour value gap right there, which we could continue higher off of. But that's quite a deep retracement to make before we actually reach this high. So for the dollar itself, it is, for example, quite important to know if we are trading a flow trading plan. I would not necessarily want to see a retracement back into this 4 hour value gap right there. And if it does happen, I would still be bullish. But I do believe we can already deliver higher right here as well towards that high right there. So let's see what happens with dollar, but it's showing good signs for the longer term as well. Yeah, dollar looks very nice indeed, for sure. Looks very nice to continue higher. And it just needs some volatility, and that's what it was lacking, I believe, at the beginning of the week. All right, let's take a look at the indices. Indices, still, my story has not changed, as in I'm still very much 50-50 right here. Now, we do create somewhat of a sharp turn, and let me mark out these daily value gaps right there on ES as well, right here. Let's see what we have, because on the 4 hour, on most of the indices, well, ES and NASDAQ right here, we can see it very, very vivid, is that we have this sharp turn right here in the making. This move higher, expansion phase candle lower right there. Let's see how we want to reject, if we want to reject off the fair value area right there. If we fail that rejection, unusual context, like we mentioned yesterday in the video, to then have a new value gap continuing lower right there and then target this daily value gap. If that happens, that could be quite interesting to look for shorts. And I also would feel more comfortable about that because you're not actually calling a top right here, taking the first fair value gap in that sense. So that could be quite interesting. Let's monitor that. In the meantime, of course, it's still reacting, as in we're still coming into that fair value area. We could still already continue higher off of this fair value area right here. Same for ES. All right, YM. Let's see. Yeah, YM still has the daily value gap right there, but it's not necessarily that I would like to trade towards it here on YM, because this is more of a consolidation in my opinion and don't necessarily like it. So I would like to wait on YM for more clear price action. All right, DAX. So let's actually look at another chart of DAX, and the main reason why I'm doing that is to get rid of that wick right there. Let's look at forex.com. All right, what are we doing? We have this daily value gap right there, not following through of it, so we can potentially reach this high right there. Have we reached that high or no? Let's see. Very similar to a situation right now on the dollar. As in, it's not the exact same, but we also have a 4 hour high to the left right there. Then a 4 hour delivery towards that high right there. We get very close, and then all of a sudden we create this retracement whilst not reaching that high. In that moment, I do not want to see a retracement right here. So I do believe we should have already delivered higher right there if we were going towards that high. Otherwise, to me, it's just simply a sign of another consolidation heading into this New York session. Now, again, what I do tend to notice as well a lot more nowadays is that DAX is really consolidation bound when it comes to New York, and London a lot less. And it used to be like that in the past as well, don't get me wrong, but it's a lot more evident nowadays, where it's DAX tends to consolidate a lot more during New York over London sessions. So keep that in mind as well. All right, Australian dollar, US dollar. Let's see. Again, if we expect higher price on the dollar right here, then this currently is just really not that interesting, because then we have this value going against us as well. Can we see higher price off that? Well, that's not agreeing with the dollar right now. So it's not that interesting right here on Australian dollar, US dollar, in my opinion. Don't necessarily want to look at it. All right, EU. Now, EU is quite interesting because here we also have that 4 hour value gap lower. Again, that 4 hour value gap is also quite a deep retracement to make, right? If we want to retrace into that to then continue lower, it's quite a heavy retracement. So if we, for example, want to deliver towards this low already, then I would already expect lower prices right here. Whilst we don't necessarily have a very clear premium at this moment in time. So if we have to force something, we can monitor this 5-minute Verwijgap, not necessarily to take a trade, but we can tape read it a little bit right there. 5-minute Verwijgap right there. All right, GU. Let's see. Continuing lower after daily Verwijgap. Well, after arguably an ugly 2-candle rejection right there. But we do continue lower. Now, what do we have? We still have the weekly Verwijgap going against us. And we still want to take that into account. But we can potentially target this fake bottom, which is actually the next video as well on spring enrollment, finishing touch month. And in a fake bottom, I've tried to make it as mechanical or as objective as possible. And the way I believe we can create a mechanical or objective fake top or fake bottom is by first having a flag. And what I call a flag is it's a retail pattern. I'm not sure if everyone is aware of what it is. It's also sort of like a swing failure in SMC. And what I mean by that is it creates this pattern right here. And that is seen as a flag in a retail pattern. Usually it's called a bullish flag because it happens on the bullish side right there. And that creates similar to a flag right there. Now, when we have that pattern right there, we have all the down candles right here. So these are down candles. And they fully overlap everything that's inside right there, creating a potential fake bottom. But that's not the first sign, or that is the first sign, but that's not the definite sign that we have a fake bottom. We can't just trade towards it, etc., and just do our thing. No, but if we have failed to continue higher right there, and we fail to create a significant rejection higher, so we fail to create a fair value gap, etc., fail to follow through, and we get, again, fair value gaps going lower, that's exactly when we could say, okay, now we indeed have a fake bottom right there at the bottom, right there, and we can actually look to trade towards it. So here we can find usable context right now, and we can use this fake bottom as our main target. So that fake bottom can be whole trading idea, and that's quite interesting. That's the same for flow. For example, right here, when we come into this daily value gap right there, we have this pattern, the same exact pattern right there. All bullish candles right there overlapping everything that's inside. We fail to create that rejection lower. As soon as order flow fails right there on the lower time frame, etc., on the 15-minute, on the 1 hour, we can trade towards this fake top right there. And again, that's quite interesting. But if we take a look at this price action first right here, and then we'll go over more details tomorrow as well, then ideally I would like to wait for a clear premium array. So a 4-hour value gap does look very good. 1-hour value gap, I don't really like it because it's quite a deep retracement right there. So opposite to the euro US dollar, which is actually quite contradicting, you could argue, because if EU is going to continue lower, GU is most likely also already going to continue lower. I would like to wait for the 4-hour value gap here because I don't necessarily see another very clear premium array at this moment in time. All right, New Zealand dollar, US dollar. We don't get a very good rejection right now. So I also don't want to do anything right here. US dollar, Canadian dollar. Yeah, this is still ugly price action in my opinion. And I don't like it. Don't like it. US dollar CHF. Well, we got it very late, but we finally got the sweep that we mentioned right here off of this swing low right there. And, well, the potential sweep. Again, it's an early sign, but there's a potential sweep of this low that we mentioned earlier throughout the week if we do want to continue higher. Now, right here, if we do want to continue higher, again, 4-hour value gaps right here to continue higher, ideally not coming back below this low right here. And if we do come back below it, not being comfortable below it. So what I mean by that is only have a sting below it, etc., or a few stings below it, but never creating body closures like this below it. No, only a small sting into it to then continue higher. That's the ideal scenario. So even if we create daily value gap, etc., could be very interesting eventually going into next week as well. I do like it. If the dollar is bullish, then this has a very nice fair value area disrespected right there. Essentially the unusual context to continue higher towards that high right there. It looks very good. US dollar JPY. Bullish and showing no signs of slowing down. take this into account. It's a long wick, and that's a news wick, I do remember as well. I believe that's a news wick. So essentially for me, we are already at all-time highs right now, again. And this is a little bit more difficult right here to navigate price action. And the reason for that is because long wicks, we have to understand the nature of long wicks. Long wicks are usually caused either through market rollover, they are caused through news events as well. So for example, this one right here, I believe was market rollover, which happened to be specifically only on Pepperstone right here, if I'm not mistaken. So those are not real wicks because it's not real liquidity. There was actually no trading going on right there. And even with news, if news happens in a split second right there going higher to then continue lower, there's no actual trading that's going on right there. So if there's no actual trading, there's also no actual liquidity. That's quite important to understand because otherwise we're going to trade towards a high. And this is what we saw similar on a lot of JPY pairs actually. We're going to trade towards a high, which is actually not the target right there. So it's a random drawn liquidity. It's just a random level. We might as well just mark out a 160 level, which is called an institution level, which is also a random level in my opinion. So that is very important to understand that for me, we are currently at all-time highs. So what does that mean? Okay, I want to have a clear discount rate, which we can retrace into daily value gap to then continue higher off of again. 4 hour, since we don't have very clear drawn liquidity anymore, is not enough for me. Silver. All right, we get some movement. Now, if we want to run this high, it is very crucial that we have a respect of this fair value gap right there to then create a new fair value gap going higher right there. If that does not happen, then we are just, again, simply in the consolidation price action. So let's keep an eye on this actually for this session as well. But my confidence, of course, in this fair value gap is not sky high because we have been consolidating for a long time. All right, gold. So at the beginning of the week, I mentioned this high. And I was pretty confident in the fact that we might deliver towards that high right there. But it was very crucial again, similar to silver, if we want to sweep or if we want to run that high. So this fair value gap right now is crucial. And if we sweep this high, we get the rejection here, video that we talked about yesterday. We get the rejection here. We get then an opposing fair value gap to continue lower off of right there, to then target lower right there in that low right there, which then turns also into a fake bottom. And then we also have this monthly value gap. So when that happens, we have a lot of confluences going for it, which could happen if the dollar also wants to continue higher and the metals actually want to correlate for once in a while. All right, then we have Bitcoin right here, which to me, yeah, Bitcoin is just really not that interesting. It's just, it lacks so much volatility. Bitcoin is really like a roller coaster. As in, it consolidates 9 out of 10 times, and then afterwards it expands a little bit, or expands higher or lower a lot, and then the whole world's going crazy, and for the rest it's just consolidating for the remainder of the quarter or the month of the year. So here it's just really not that interesting to take a look at, in my opinion, and don't really want to do anything. All right, crude oil. So Joey already mentioned crude oil is exploding higher right now. That is quite interesting because that is something we need to know right here. Because if we are already exploding higher, then I'm looking to the left right now to see if we can have some targets. Let's see, we have this nested fair value area inside it, but did we already come into that? We came into that earlier on right there. Okay, that's good to know because then that target is gone essentially. Then we have this fair value gap right there before we reach the high right there. Okay, so right here, since we're already expanding, I am not necessarily, and that's the first thing that I wanted to mention, because when I was looking at crude oil, it was not expanding higher just yet. I was first looking at this daily value gap right here, overlap with the fair value area to potentially continue higher off of right there. But if this continues higher, then I would argue this becomes a breakaway gap, at least in the short term as well. So on the 4 hour, etc., if we can already find new fair value areas, new fair value gaps to continue higher towards those clear drawn liquidities right there, then I would prefer looking at that. So that could be quite interesting. Let's see what it wants to do. Right now, if we're talking about short term, as in the next session, is it very interesting? In my opinion, no. We need something on the higher time to set up very clearly in order to get something interesting on a lower time frame again. So that's waiting. All right, Bank Nifty, nothing much has changed. We have this fair value area right there now on the daily, which could be very interesting to continue higher off of again. All right, GBP/JPY. So GBP/JPY, again, I mentioned yesterday, I do like it enough to put it on a long list, but we still don't have that clear discount rate, which we can continue higher off of, in my opinion. Yes, we had a 1 hour value right there. I would prefer something on the 4 hour, to be honest, right here. And we don't really get that. We don't really get that right here. So it's not that interesting. EU, New Zealand dollar, US dollar. We talked about Canadian dollar, CHF. Having this big expansion phase higher right there. So if anything, we might be looking at unusual context right there, targeting that high. So if we take a look on the 4 hour, currently it's just one big fair value gap going higher. So it's not that interesting just yet. But could be quite interesting to take a look at some unusual context right here to target higher as well. Waiting list, Euro CHF, similar, but towards this fair value gap right there. GBP Canadian dollar. This one is now following through, or at least having early signs that it wants to follow through of that bearish fair value gap right there. So here, if we can continue lower of a 4 hour value gap towards this low, that might be quite interesting right there. That could be quite interesting. So keep an eye on it as well. New Zealand dollar JPY. Yeah, having a continuation higher, but it's not a very convincing continuation right here. So again, not really interested in it. All right, let's see. What are we dealing with? Yeah, dollar does look very nice indeed. Good morning. Let's see. Is it true if I say that 4 hour candle signs help to anticipate daily closure? 15-minute candle signs, 1 hour, and so on. Yeah, for sure. So the way it works, essentially, I don't believe I've made a video exactly on that, but I've mentioned it a few times during live sessions. And the way it works, essentially, is on the lower time frame, you're seeing early signs of what will happen on the day. So, for example, you can know by 15 minutes for value gaps how they act, etc., what the daily might do if we're already disrespecting a 4 hour value gap or a daily value gap, for example. So it's always an early anticipation, if that makes sense, of what the next time frame, the time frame above us, wants to actually do. So yeah, for sure, it's really interesting because when you think of it like that, then you can get early ideas of what candle signs wants to do potentially before actually seeing the candle close, if that makes sense. That's very interesting. Very interesting. Let's see. The time frame when you switch is difficult to see. The change, can we have watermark? We say, yeah, for sure. Let me see. Which one did I use? I used this one, I believe. It was quite nice. Let's see. No. Okay. A little bit bigger. That's it. Also the symbol, you reckon? Well, I'll just do the time frame so it can be a little bit larger as well. Right there. Can we? Okay. All right. Let's see. I've got quite a checklist for identifying fake tops and fake bottoms. Would you want me to send it so you can perhaps take a look before you record your video on it? Maybe you'll draw extra inspiration from it or not. Yeah, feel free. Feel free to send it for sure. Feel free. Thank you. I appreciate that. A fake tops and fake bottoms is arguably one of the hardest things to explain. I've struggled with that the most. It's one of those topics where it started off really subjective, then sort of have to crawl into my own mind to see how I want to explain it. How you handle this overlapping? Let's see. That's perfect the way you have it. That's perfect the way you currently have it, right there. So yeah, the way you have it, I'll show it on the screen as well. Let me see. The way you have it right here, this is perfect. This is perfect right there. With that fair value area right there, stay into it to continue higher. Yeah, that's perfect. Absolutely perfect. 100%. 100%. The wicks is a sweep. The body's run. Yeah, if we're talking about this right here, where it's not closing above that swing high towards the left, then yeah, we could argue it's a little bit of a sign of a sweep. That's why we do want to have good confirmation. And the reason why that's important is because if we look at silver, then right here, we've been consolidating a lot. So this right here, this first move, is what we have to confirm really well if we do want to continue higher. But overall, you marked out perfectly, 100%. Concerning the news week on UJ, you said that it's Newsweek and that we should assume that there was no trading up there. However, when you look at the 1 hour, on the 1 hour time frame, for example, you see several candles closes quite near to the wick high. Therefore, that would be an indication to me that there was real trading activity and still a clear drawn liquidity. Okay, share your thoughts on that. Let's see. If that's the case, then I would agree with you. Then I would agree with you as well. Let's see. It's very fast price action, so still it's very similar. But yes, then I do agree with you. Let's see at the 15-minute actually. What do we have right there? Yeah, then I do agree with you. Then I would refine it a little bit more to this area right here. This area right there. So then this would be the clear target zone for me. And then afterwards it sort of dies down again. Yeah, that's a good observation. Good one. Good one. Yeah, for sure. Right there. All right. And then it depends on the perspective you have. As in, if we're talking about higher time frame liquidity, then most likely there still wasn't any liquidity on that wick right there. And why is higher time frame liquidity is important? Because the whole liquidity theory is based on higher time frame liquidity, not necessarily lower time frame liquidity. Because institutions are not necessarily actively looking at what the lower time frame is doing right there. More so higher time frame, if that makes sense. But you're correct, indeed. Indeed. Okay, take a look at UJ. Let's see, for sure. We're here right now. Ended off the fair value area. Let's see. Perfect rejection, actually, right there. Wow, that's beautiful. Let's actually quickly take a look. What is that? Because something happening on EU. EU is this is not really looking good right here. This just looks like a simple consolidation. And I do think we can still deliver towards that low right there, but if the delivery is like this, then again, that's not that interesting. All right, use all JPY. Ended off of this fair value area, I imagine. This one right there. That's perfect. That's perfect. Let's see if I'm not sure where you put your stop loss. I personally would place my stop loss something similar to this right here, to then target a 1 to 2. That's looking nice. Keep in mind this fair value area. That's very important. So keep in mind the breakaway gaps right now that we don't want to see a big retracement right here. That should not happen. So if you enter like this, exactly like this, then this would already be break even for me. I'll stay in all the CHF for sure. Let's see. So we have this unusual context right here as well. Let's go down the time frame. Do we have a clear discount rate to continue higher off right now? Not necessarily. This for me is the target, this high right there. But there's one thing that we have to keep in mind, and that is that we have now created unusual context in this scenario one time, a second time right there. We're now going to do it for a third time. Isn't that just a sign that we are consolidating? So if I had to choose a target, it would be that high right there. But I would be very wary of the fact that we might just be consolidating right here. So that's very important to understand as well. Let's see, here in Australian dollar, New Zealand dollar, mark respecting took a rejection from the monthly value gap on daily, with hitting weekly resistance. In a situation, we wait for daily value gap to take trade based on 4-hour overlapping defense. Let's see. Weekly resistance. Let's see. Australian dollar, New Zealand dollar. Monthly, getting respected right there. Perfect. Then on the daily, okay. So, or take trade. Well, that's not really a question for me. As in that situation, we wait for daily for VIGAP or take trade based on 4-hour overlapping events. That's not really a question for me. As in, that's what does your trading plan say? And then do that, essentially. Now, I can tell you what I would do. I would wait for a daily VIGAP right here. And I would like to see a daily VIGAP to continue higher off of right there. And then potentially afterwards, seeing the 4-hour. But the 4-hour discount rates or the 4-hour discount rates right here are just not too clear to me of what we can continue higher. I see the overlapping defense right there. But overall, it's just don't necessarily like it. I would prefer a daily VIGAP right there. Yeah, crude oil was very nice with the unusual context. This target was so clear. It was such an easy target. It was beautiful right there. That's one of those sections right there where we just have to capitalize on it. At least the bare minimum is 2 RR right there to capitalize on it, because that's beautiful. That's absolutely beautiful. With this right here, the rejection, failure, per VIGAP right there, that's absolutely beautiful. 100%. It was a beautiful move. Beautiful move. Could you give me your thoughts about this trade I took at 3:22 a.m. GBP Canadian dollar? Let's see. This one right here. GBP Canadian dollar. It's on the 1 minute. That's quite tricky. The first thing I would say already is a 1 minute on crosses. That's a little bit tricky. But if it's a London session, then it's not too bad. Let's see on the 1 hour. What do we have on the 1 hour right here? All right. It is. Let me see, actually. That is essentially what you were talking about, right? With the question earlier, with if you go into the 1 hour right there, can you see how the 4 hour then closes with candle signs? Yeah, exactly. And it's exactly shown through this. So candle signs will happen on the 4 hour, where on the lower time frame, for example, it will be order flow. So that's very interesting. Let's see. On the 1 minute, if we dive into the 1 minute right here, we have the 1 minute ST. Then after, where was the exact entry? It was right there, I believe. Wait, let me check again. It was there. The entry, I would say, is I don't fully understand the entry logic right there, as in why this one right there. And what I mean by that is now we have an FEG going against as well, or at least an expansion phase right there. So for me, it would make sense either earlier on, or it would be later on right there, because now we have an expansion phase going against it. So I would wait for a new VIGAP going for us, essentially. But other than that, it's a good idea. I do like it. 1 minute, again, like I mentioned earlier on the crosses, be careful with that, because that is sometimes can lack a lot of volatility. Spreads can be high, etc. Things like that. So be careful with that. But if you do trade London session for a London major as well on the 1 minute, then you can definitely get away with it 100%. So just take into account those times. In Australian dollar CHF, after tapping monthly, overlapping defense market confirm the 4 hour order flow. Can we look for buy on the base or wait for daily sharp turn? Let's see. Australian dollar CHF. What are we doing? All right. So 1 minute. I thought that was a high time frame. If that was the high time frame, it looked very good. Let's see. Monthly, we still have that for VIGAP right there. On the weekly, daily, okay. Daily, like we mentioned, unusual context right now. After having monthly order from the 4 hour flow, can we look for buy on the base or wait for daily ST? No, here for me it's already fine to look at the 4 hour. But now the question is, okay, can we actually create context towards that high right there, or can we just consolidate right here? Because we've created unusual context multiple times. But the 4 hour right here is already perfectly fine. Although, if we do want to continue higher on the 4 hour, then this discount rate to me is not that clear, and I would want more confirmation of that, just purely based on the fact everything we just mentioned, if that makes sense. But it does look quite interesting, that high right there. Yes, for sure. For sure. Do the fake tops and lows are connected with fake moves above or down these tops to find liquidity? Yeah, so I'll tell you the origin story of a fake top, a fake bottom. I essentially just went ahead, and it was almost, well, arguably one of the first studies I did. It was in 2022, and it was one of the first studies I did where how do real tops and bottoms form in the market. And what I got, or the understanding that I got, is that we first have a fake top. So we first seem like we create a top or a bottom in the market, and after we have a sweep below that. So for example, right here, a sweep below that to then create the real bottom in the market. That sweep below that is a sharp turn. So that's how I got to a fake bottom. That's also how I got to a sharp turn. And afterwards, that creates order flow. So that's how I got to order flow. It's everything sort of started clicking, started matching right there. So yeah, you are correct. Indeed. Indeed. Do you have eyes on relative strength? For example, your GBP to check with pair which is stronger for cross to trade, also in Australian dollar, New Zealand dollar. No, not necessarily, and I'll tell you why. If we're looking to trade either EU or GU, for example, then GU or EU itself will already tell us that. So, for example, currently we can see that GU is a little bit weaker. Why is that? Because this same low right there is a lot further on EU right there. So EU essentially has more resistance going for it. So Euro GBP right there, you don't necessarily need it. It's just an extra, I would argue, a little bit extra headache to go over another pair right there, which you also have to be right on right there. And by just looking at EU and GU, all right, which one has more resistance going against, etc., which one is close to the drawn liquidity, that's the one we want to be trading, if that makes sense. Thoughts on gold 4-hour stick after this candle closes? Let's see. No, this is not a stick entry that I would take. And again, if I take a stick entry, I need to be 100% certain that we're at least going to have a rejection. And we are now on the verge, on the edge essentially. If we take this entry, it could just go against us right there, right here. Because this is essentially the deciding moment. Will we run this high or will we sweep it? So I would rather wait a little bit more right there because we're potentially sweeping this high right there. So this fair value gap in itself is already not very high probability in my opinion, if that makes sense. So in that case, I would rather go on the 1 hour to potentially look for 1 hour stick. And the reason why I would do that then is because then you have more chance to go break even. Well, if we're looking at the 4 hour, then EU is indeed stronger here than GU. If we're just simply looking at the 4 hour, then EU right here is stronger than GU. Because the same low, this same rejection that we had right there, we're not seeing that on EU right there. Australian dollar, Canadian dollar. Let's see. This is not interesting. It's a consolidation on the daily. That's not that interesting. Yeah, this is something you want to stay as far away as possible from. How did you capitalize on crude oil? Did you catch the last 15-minute read before taking the 4-hour contact and draw liquidity? My entry was a little bit earlier actually. It was in this up candle right there. It was just before the live session started as well. Something like this, where I covered on the 1 hour these bodies right there, targeting the high. It was something like this right here. Right there. Let me see. Are crude oil inventories the only news to trade it? Yeah, well, throughout the week, in my opinion, you can very fine trade crude oil. You don't necessarily need crude oil inventories, but it's very important to understand as to, for example, why we consolidate right there. We might have crude oil inventories the next day. So as soon as you see a consolidation or see early signs of a consolidation, then crude oil inventories is important to understand, because afterwards we can just look to continue higher, continue lower. Can we take a stick entry on silver on daily close? Is it high probability? Let's see. On the daily close, no, that is absolutely not high probability right here. And again, just it's not it's not to be rude, but sometimes I question if you don't necessarily need to ask me if something is high probability oftentimes. And I just want to make very clear right here that this is the furthest thing from high probability that we've seen throughout the week. The daily close right here on silver and taking a stick entry right there. And all we need to do right there is simply stack up arguments. So if we look at the arguments right here, then we have this weekly fair value area right there, which we can potentially continue higher from. 2 candle rejection is somewhat intact right there. So I could give you that right here. We could continue higher, but we do have a big rejection of the weekly value gap. Then if we go into the daily, we had this rejection already higher, actually earlier. That candle right there came into the value gap. Afterwards, that as well, which continued higher. So after we have this bearish value gap, we don't create any new bullish value gap. So why all of a sudden would this be high probability, if that makes sense? And again, that's not nothing as you or something, but that's just a genuine question. As in, why would that be a high probability? Close on swing high. Yeah, but even then it wouldn't be high probability, because then we just have one rejection. What makes us think right here that then all of a sudden we can run after failing rejections multiple times? The arguments are not in our favor. The arguments are very 50-50 right there still, because we're still overall consolidating. It's a good question, don't get me wrong, but it's not high probability. No. Let's see. Was the entry crude oil 4-hour stick? Yeah, 4-hour stick. Yes, exactly. 4-hour stick. 4-hour stick for sure. NQ melting. Let's see what's happening. Yeah, there it is. Let's see. See if it even presents an entry opportunity right there. It might not. It might just already continue lower. Let's see if we get something. Again, that's very interesting, because it's basically the whole sequence that we have. Fake top, sharp turn, then continuation lower, and then we could potentially continue higher again off the daily value gap, who knows. But right here, we have this fake top right there, fails to reject. Then this right there, not the nicest delivery overall, but afterwards we start to deliver higher again. And this right here creates a sharp turn. So this fair value going higher, immediately create an expansion phase, even if it's already an expansion phase, going back into the fair value area right there to continue lower, to then target the low of the rejection that we had right here, which is essentially the fair value gap. That's a whole schematic on its own, if that makes sense. Let's see. Yeah, that's all right, Quick. That's all right. It's good to learn from. Love to see it. Take nested order block for value area on weekly. Let's see. Yeah, could be. Again, to me, it's just not a high probability trade. Could it play out? 100%. It could play out right there to continue higher as well. But if we're just looking at factual arguments, it's just not really that high probability. Good morning. Sorry, I'm late. No worries. No need to say sorry, my friend. With the GP Canadian dollar, what's your thoughts? Let's see. What are we doing? Yeah, so I do quite like this because we have this big rejection right there lower. We mentioned this right here is quite 50-50. Sticking to the Verwijker gap right there. Have a nice rejection lower off of that. And afterwards we have this low as well. Thank you, emojis. Afterwards we have this low as well, which we can look to target. And right now it's just simply unusual context towards that low, which could be quite interesting. And if we can get a sting into it, then I'll definitely monitor it. Again, I wouldn't expect a bigger trade right here. So the fair value area to me is out of the conversation. That's not necessarily interesting. I would mainly expect 4-hour value gap right there, sting into it, to then continue lower off of that. Could be quite interesting. I do like it. I do like it. See, are the 4-hour ID on silver? Would you only take it if you get the entry on the fair value area, the odd, or fair value gap? Let's see. Trade from the fair value gap is low probability because below us there's odd, right? Let's see. The 4-hour ID on silver. Would you only take it if you get the entry on fair value area or fair value gap? Trade from the fair value gap is low probability because below us there's odd light. All right. Yeah, I do. Okay. I see what you're saying now. So this right here. Yeah, no, I do. I see that. Yeah. I agree with that. Yeah, so here, if we already get a rejection, which we might currently get right there, it's really important right now to monitor the rejection. So we get a sharp turn right there. Perfect. We can already look to continue higher. But the higher probability thing is indeed, like you mentioned, that's always going to be the overlapping defense for sure. 100%. Yeah. That's true. That is true. Let's see what we want to do right here. If we already want to reject or not. GBP Canadian dollar at lowest potential fair value gap on the monthly. Let's see. Yeah, there it is. That's good. Because that means we have another confluence to target lower. That is nice. As I'm thinking of Forex with crypto, can you create a video on the pip calculations and the leverage and the margin? Looking at your videos, Forex is more interesting than crypto. The calculations are more important as I'm confused with calculating pips in majors, crosses, indices, and metals. For sure. Well, I can do it really quick here as well. If I would spare anyone the headache, don't calculate your own lots. Don't do that. That's just not really. And by the way, for the leverage, etc., let's put that clear. As in, leverage does not influence how much risk it potentially can have. The lot size, etc., will always stay the same. It just you are limited to a certain amount of risk. So if it comes to 10 lot size and you can't risk that, perfect. That's essentially it. Leverage margin does not influence it. It's purely based on, okay, how much do you want to risk? So what is the risk percentage? And then you look at, okay, what is the pip size of my stop loss? And then from that, it calculates it very easily. You have a lot of tools for it as well. So let's say here, if we take a look at euro US dollar, for example, then let's say we would want to enter this and we would cover that high right there. And we then have from that towards that, it's 21 pips, 21.2 to be exact. And that's the right thing that you see right here, this one. That amount is the pip amount right there. And that is what you fill into a calculator. And then that gives you the appropriate risk. And that's about it. And that's the same for majors. It's the same for indices. Indices is a little bit different as well. So if you want even a free tool for calculating lot size, then that helps a lot. Saves a lot of headaches. Got this 1 to 2 hour GBP Canadian dollar stick model 2 hour entry, 2 hour 4 hour entry, stick model 2. okay. 4 hour entry. My whole thinking process was the monthly giving initial signs of a sweep and already taking into account the potential monthly busy in the making, aligning this with the having a weekly busy below already as a target. and finally waiting for the daily resistance to fill. The way I looked at it was the Monday candle being kind of being kind of a balanced candle, and Tuesday not seeing any strong continuation to the upside and somehow consolidating at GPG CPI. That made the sting into the daily SIBI. My confirmation entry was 5 a.m. 4-hour strong bearish candle close. That also was a 1-hour ST. It's the first time I trade this kind of unusual context, and when I can see that maybe I got it in a bit early without proper confirmation. But hey, I was between this one and New Zealand dollar CHF. Probably this was in my favor this time. Yeah, I do like it. I do believe as well, like you mentioned. So to show the entry right here, the entry was quite early, so that's a bit tricky. But I don't necessarily think it's a wrong trade idea, and I'll explain why. Because essentially, what you're doing at that moment in time is, if we want to continue higher right there, then we would have taken out that rejection where your stop loss is. So then the whole idea would have been wrong. We can look at higher prices again. So essentially your trade is good, as in it's on the verge of collapsing. And what I mean by that, if you are wrong right there, then the whole trade idea is wrong, and we got everything wrong essentially. So it's an early entry. I do agree with you on that as well. So you might want to take a little bit lower risk, and then the second later on, you might want to increase the risk a little bit. But overall, it's a really good thought process. It's a really good thought process. Yeah, for sure. For sure. Yeah, and especially it's very interesting to see this right here. If we compare this to what we had, for example, on the dollar last week. Where on the dollar, we have a similar situation. It's not the exact same, but we also have this big down candles right there for value gaps going lower. Then the difference between what we see right there on New Zealand dollar CHF and what we see here on the dollar is that we actually get a rejection higher. And on New Zealand dollar CHF, it just fails to actually reject higher right there. And yeah, that's a really good sign that we indeed want to potentially continue lower, disrespecting it fully. Very interesting. Can you give a notion on the calculations? I'm going to send you a website, but I will not create a notion on the calculations, my friend. Let's see. Just want to get your thoughts on this stick on GBP Canadian dollar. It wasn't the highest probability coming off the daily SIBI with no daily order flow, but I expect the price to at least take SSL. And at that point, I could have gone break even already. Let's see. On the stick GBK, what's the highest probability coming off daily? It's the exact same. It's the exact same? GB, is this a different pair or? Wait, what? What am I looking at? Am I? Yeah, no. Okay. Yeah. I was a bit confused. Yeah, no, okay. Yeah, exactly. Yeah. It's the exact same. Yeah. 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 I was tripping for a little bit. I was confused. I had New Zealand dollar CHF in my mind, so I was like, what? Where New Zealand dollar CHF and GB Canadian dollar the exact same? No, yeah, perfect. Yeah, I can see why it wasn't the highest probability, but I can also see why it's a good trade idea. As in, I would still classify it as a good trade. I would still classify it as a good trade right there, for sure. I would say the only thing is that it's quite an early trade right there. But other than that, it's a good trade idea. And what makes it good, if it there's a difference. What makes it good is the daily right there. What makes it good is this daily candle not having that volatility right there to create an expansion phase, for example. So if that happened and then we got a rejection, I would say that's not really a good trade idea. But yeah, there's early signs that we're quite weak. That's good. Yeah, absolutely. Well done, for sure, 100%. ES is reacting higher on the 4-hour value area. Let's see. What are we doing? There it is. Okay. Is Nasdaq doing that as well or no? No. Well, I say no, but that's quite a heavy rejection. Okay. Let's see. Let's see what they want to do right here. ES. ES, it's... How far is this high? Can we build up order flow right here on the 5 minute? That might be interesting. see. And he says, wow, less minutes on the 4-hour candle. Yeah, absolutely. Absolutely. Yeah, for sure. And Q is having the big rejection as well. It's relatively seen, still smaller, but if we then go down time frame, it makes it even worse right there. Where here, these 1 hour value gaps is not necessarily something I would confidently now trade off of if we're having that big of a rejection right there. Let's see. Yeah, both of us were, yeah. Yeah, all good. All good. I took this 1 hour stick trade on GBP Canadian dollar today and would like to hear your thoughts on going break even. I was considering going break even after 1 hour candle already expanded nicely, but did not end up going break even. Let's see. Because there was still a 4 hour value gap in creation that worked out nicely, but would love to hear if you would have gone break even. Let's see. So you mentioned there was a 4 hour value gap right there in the making. If we check that moment in time, let's recreate the entry. You covered the sting, that's perfect. I have this, okay. Okay, let's see. Okay, let's see. On the 4 hour, right there. Yeah, with a 4 hour value gap in the making right there, it would be very difficult. As in, I mentioned, what I mean with that is, it would be difficult to potentially go break even right there. How far were we in the creation of that 4 hour value gap? As in, were we close? Were we not close? Let's see. 4 hour value gap closed at 9. Yeah, this would be, to be honest, right here, it would be quite subjective. As in, for me, if I say I would go break even right now, that's purely because of the hindsight fact. I'm not too sure if I would go break even in that exact moment. But your logic is very good on the 4 hour for value gap. And as well, what I would say as well is on the daily, etc., following through of that daily for value gap right there to target at least this low right here. There's more confluence to still continue lower than to all of a sudden continue higher right there. So I would argue, based on that, I would also not go break even there just yet. But again, that's me talking from hindsight right now. But yeah, hopefully that makes sense. Let's see. Come on, Ducks. Done on Ducks. Oh, nice. Nice one. Wow. That's a fast delivery. That's very fast right there. Nice. Beautiful sting. That's beautiful, actually. Nice. Good stuff. Yes. Let's quickly take a look. Yeah, let's see if we want to create this order flow right here. It's quite a big ST, which worries me a little bit, but let's see what we want to do. Let's see. GBP Canadian dollar entry on 5 minute on overlapping defense is good to reach draw on liquidity. GBP Canadian dollar on the 5 minute. I'm not sure why we are looking at the 5 minutes. That's my main question. Because we have fair value gaps forming above it right there. We have nothing we are trading off of anymore. It's a very random 5 minute entry right there. If we take a 5 minute entry like this. So for me, can it reach the draw liquidity? Yeah, for sure. But for me, that wouldn't be an entry. The one trade a day and understanding high probability conditions with flow trading plan feels like it will take forever to build enough track to assess my skill and improve. Pronounce E-Man C. Ah, okay, perfect. Thank you for letting me know. E-Man C. Perfect. Perfect. Yeah, well, the one trade a day, I do believe If we're talking about flow, that's enough to get an understanding of what high probability. And if you do want to take more trades a day, you can do that. Just keep in mind, keep your risk a little bit lower. And then you can, for example, if you take for now, you do everything with 0.10% risk, then for me, go ahead and take maybe 10 trades in a day. It's 1%. It's quite a lot, but you will get a good understanding of what is high probability, what is low probability, etc. Things like that. But yeah, but when we're talking about 1% risk, then I would say 1 trade a day. Focus on that fully. Yeah, the E-Man-C. Perfect. Yeah. All right, let's see. So the thing here is what I mentioned is it worries me a little bit that it's a big sharp turn. And the reason why that worries me is the bigger the sharp turn tends to be, the weirder the price action tends to be on the right here. So we might get something like this to then continue higher. And then we get somewhat of a consolidation to then still continue higher. That tends to happen. Hopefully I'm wrong and we get a beautiful delivery higher. But that worries me a little bit on the big sharp turn. And the longer that takes to form that then we have a 1 hour value going against us. Then we have a big rejection on both the top and the bottom right there. In the meantime, we've continued lower again on Nasdaq. I'm not sure. I'm not very confident in this sharp turn right here. To understand what does it mean fast delivery on euro US dollar. Let's see. Yeah, exactly. Those are the trades that we want. Yeah. If we can have every trade like this, that would be perfect. Even if we get taken out immediately, would also be very nice, right? Yeah, that's the fast delivery. It's just very nice because you can go break even. Well, it's very fast, etc. It's beautiful. It's absolutely beautiful. GB Canadian dollar entry on 5 minute on overlapping defense is good to reach drawn liquidity because I was thinking that retracement towards a fair value of overlapping defense is more retracement than reaching drawn liquidity. What do you think? It really depends. As in, I don't like the entry because I'm not seeing clearly the drawn liquidity, this drawn liquidity right there. Which, from that perspective, yes, we could continue lower off that. But for me, this entry and then having this type of stop loss right here with later in the day as well. So it's not a prime London session, prime New York session anymore. It's a bit random. It's a bit in the middle of nowhere right there. I would like to have my stop loss at least take into account for certain higher time fair value gaps. So we know what we can continue lower off of. We know where low probability also starts right here. So for that sake, I don't necessarily like the trade ID right here, personally. I would like to have always 5 minutes off of at least 1 hour, 4 hour, something like that. Fair value first to then follow the 5 minutes. Also no bullish fair value on the S. Yeah, true. Yeah. Very true, very true. Also looking at GBCHF, sticking to the daily to then continue lower to the monthly fair value gap. What's your thoughts? Maybe create thank God Friday if we get a high close. GBCHF. Which one is this again? What are we doing here? Yeah, that's actually very interesting. For lower prices, let's see, what do we have? Well, we're creating a weekly fair value gap, which is actually quite interesting because that weekly fair value gap is what we can potentially continue lower off of next week. So that's quite nice. This daily fair value gap right there. Yeah, if we get a high close, that indeed is nice for a 10 hour Friday setup. Yes, 100%. Yeah, that could be quite interesting. If we want to continue lower towards the monthly fair value gap, then I do want to see the weekly right there, weekly fair value gap, and have good confirmation because I do believe we might create a daily fair value gap going against us as well. What is your thought about Euro CHF? Let's see. Euro CHF. So let's look at the weekly. It's very similar to GBP CHF right here. And that monthly fair value gap, not necessarily expecting higher prices from it, but if we do have and I'm mainly going to talk about next week then. If you have this weekly vertical right here in the making, we start disrespecting that. Again, that could be this area between the weekly vertical, monthly vertical. That's quite 50-50 at this moment in time. So I would have to see right there what we want to do. But either disrespect the weekly vertical to continue lower right there. Take out 2 candle rejection. That could be quite nice. That would be my first thought process. Let's see what we want to do. I think the trade was based on, at least from what I can see on this chart, is just purely if I could continue lower right there. I think it's flow trade plan, that's for sure. And that draw liquidity right there. I believe. Interesting. Nice one, Chris. 1 hour for Vagab now formed on ES. Yeah, I'm tempted to this formation, such formation like this, in combination with what we're seeing on lower time frame, we tend to see lower prices right there. I'm liking still more the lower prices. We had a good rejection right there, but I do feel like the lower prices are more evident still. If we take a look at what we can continue lower off of though, then the 1 hour, this 1 hour value is, again, if we reach that, then I would all of a sudden turn bullish again, because I do not think we will retrace back into that. Then I would start taking a look at this 1 hour value gap. And if it's not that 1 hour value gap, we already continue lower. It would be a lower 15-minute value gap actually, right there. Okay, one candle. I'm going to shut off my charts. Perfect. A 4 hour. 4 hour. 4 hours left to go till we create a new 4 hour candle. So that's most likely not going to be very interesting. Let's see. Yeah, no. No, I don't stay up for it. No. No. Alright. Let's get silver really quick as well. Alright, perfect. Silver. So I'm following through right here. Quite interesting. Alright. Gold as well. Following through quite nicely. So running that high currently, I would argue. Then we might be looking at a higher target as well. First we have this fair value area right there. Afterwards the highs as well. Interesting. Dollar. Yeah, this is still tricky. Still waiting. Not necessarily something very clear. Alright. I am going to end it right here, team. Thank you everyone for being here. What am I looking at for the rest of the crude oil? Still, it's quite interesting with the 4 hour right there, but that's going to take time. That's going to take some time. For the rest, GBP Canadian dollar might be still interesting to me. All right, thank you everyone. Have a great day. Thank you. And I'll keep everyone updated as well. Perfect. Thank you.